Hello everyone and welcome to your on-chain update for the 26th of June. I mean, this space just does not stop moving, does it? We've had BlackRock and I think 6 or 7 other major players in the space put forward ETF applications for a spot Bitcoin ETF. Now, look, the honest truth is it doesn't really matter whether this thing gets approved or not, because what this essentially shows is that Wall Street is now saying, right, we're coming in. And to be honest, this was always an expected result. We were always going to see these large institutional players come in. Considering the proximity to all of the SEC news, in many ways, this kind of speaks to for want of a better term, even though we can kind of question the reality of what this means in terms of, should crypto native firms be the kind of ones that lead or Wall Street? But in many ways, when I look at that spread of things, we didn't exactly do a great deal in 2022 to prove that the crypto industry can kind of handle itself. I think, when we really take a hard look at what happened over the last couple of years, do we kind of need a bit of a cleanup? You could argue yes. On the other side, you've then got the Wall Street folks who are just going to run their own version of the casino, right? The new boss is the same as the old boss. It just happens to be that the old boss is stepping back in. But really what this shows is that this industry it's on the radar and the money is going to come into this space. In many ways, if you're a large institution, you just simply can't deal with the risk of a crypto platform. So that has been, and rightfully so, a holdback point for many institutions. Once you bring in some kind of regulated vehicle that they can get exposure to this industry, I mean, even fractions of a percent of a portfolio, the amount of money that is just extraordinary. So in many ways, I think that this signaling event, whether it gets approved or not, is actually kind of irrelevant. I think the fact that it's BlackRock really does signify that there's probably a bit more momentum to this whole thing. But I'll tell you what, it is kind of hard to see given the global environment where Bitcoin stands as a powerful asset in that space. I do find it hard to kind of find a bearish case. Certainly, those poor folks waiting for 12K Bitcoin, I think they could be on the wrong side of this trade. But anyway, with that kind of said, let's have a look at the on-chain side of the equation. We'll go through some crowd favorites we looked at over recent weeks, which I think tells a bit of the story from the supply angle, but then also from the realized profit loss angle. And just trying to understand what the market is doing now that we've pushed back above 30K, certainly with the fundamentals to back it up. So the first thing I want to start on is actually this signal, right? This is our topping and bottom type signal. And I mean, quite clearly, right, we're still flatlining. So the question is, like, are we kind of getting some kind of blow off top here? Is there some kind of extreme exuberance? And the answer is no, not even remotely close. Now, what are the inputs to this thing? Well, there's 4 of them. There's MVRV ratio, which is unrealized profit and loss. There's SOPR, which is realized. So basically, how much are people in profit and not spending? How much profit are people actually locking in? That's kind of the unrealized and the realized. Are the miners seeing just extraordinary profits? And are hodlers offloading their coins at a very rapid clip? And given none of those are firing in either direction, but not certainly to the upside, that means that nothing is going on. Now, to put that into a bit of context, here's those 4 traces actually overlying each other, just so we can get a bit of a sense of scale. We're basically coming off neutral position for all of these. So we are very much, here's 2016. We spent most of the year grinding sideways and upwards in this kind of neutral-esque position. 2019, we went well and truly above, pulled back below, but over the macro scale, we kind of hovered around neutral. So in many ways, it kind of looks like every previous cycle. What I will just highlight is how beautifully these rounded bottoms form on all of these oscillators. Remember that they all have price in the numerator, so they're all measuring the same kind of thing. But what we're doing is changing the denominator, which is essentially what is your mean reversion line? What are you basing your behavior off? What's kind of the grounding anchor? And that's why we use unrealized, realized, miners, and hodlers, because it's kind of giving us the 4 subsets of the market that really drive a lot of the pace. But these beautiful rounded bottoms, it's kind of, Bitcoin is just this beautiful cyclical beast. It goes on these interesting patterns. You can see how the rounded bottom phase looks the same. 2016 has kind of a character very similar to 2019 and potentially very similar to where we currently are. Bitcoin just has this rhythm and we see it play out over and over again. But that was kind of the first tool. I just wanted to kind of snapshot, but put things into perspective that, we're up 100 and something percent off the bottom and, things are still quite calm and collected, to be perfectly frank. So having a quick look at things in terms of a supply dynamic perspective, again, you can see a lot of similarity in every cycle in this chart. Here we're looking at long-term holders as a proportion of the total supply. In blue is in profit, in light blue is in loss. You can see there's still a whole bunch of long-term holders in loss. Now just bear in mind that the y-axis down the bottom here starts at 35%. So this is like an iceberg. There's another 35% of long-term holders in profit down below here. Just so you know, just for a sense of scale. But anyway, you can see there's still a huge amount of long-term holders holding coins in loss, and they just don't seem to be going anywhere, right? We've had the uptick following FTX, so now we've kind of got a new high in long-term supply, but we're kind of in this sideways grind that typically kind of captures this behavior. During this consolidation type period, the 2019s, the 2016s of the world. Now, what we haven't seen yet, here's 2016, we had a decline in long-term supply as we entered the disbelief phase. These are people who didn't want to stick around for the bull and were basically shaken out on the way back to all-time high. 2019, we had a miniature version of that, which was kind of motivated by this big price action. We haven't really seen our kind of dip of uncertainty, let's call it yet. And to be honest, given the kind of news and also the resilience that's been built up, we've talked about some of these metrics. Actually, in fact, we'll touch it in a second, but how the shrimp appear to have learnt cycle after cycle. It is possible we actually don't get that. And I'll tell you what, I mean, talk about a supply squeeze. You get an ETF approval and you got a bunch of hodlers who are like, sorry for the pain of 2022. I need a higher price. I'm just not letting go of my coins until you pay me what they're worth. And they're worth more than 30,000. That's kind of where I feel like that's the undercurrent here. So again, we'll wait and see, but that's kind of the hypothesis at the moment, that we haven't actually had enough of an incentive. And previously, as I've said before, when we get to the all-time high, that's when things really start to sell off, right? That's when long-term holders, I mean, obviously the demand flows in at the same time, but that's when long-term holders really flush out. And naturally, they put in the top because they just sell too many coins, right? You can see how long-term holder supply basically stops declining at the top because they're basically done. The market's saturated and then it kind of caves in from there. So anyway, we're some distance away from this, which is kind of nice to see. This is that chart I was mentioning before about the shrimp. So just touching on entities and how their balances are changing. I mean, the shrimp are just stacking sats. They just keep going, right? Their balance just continues to accelerate to new highs. They are unwavering. And what I mentioned before was this view. You can see the last time they bought this high was at the 2017 top. And then they basically didn't buy that much until we were back at the same price, just coming in from the other direction. So the shrimps appear to have learnt. They've learnt their lesson from the previous cycle and they're getting smarter. Crabs as well, we're seeing a noticeable uptick on the way up. There was only one chart here that I wanted to pick up. I think we covered this all the other day. So there's not a great deal of changes with the exception of the whale cohorts. Now, notice here that basically on this rally higher, we've seen a fairly substantial decline in whale supply. Now, this one here is only measuring volume from whales to and from exchanges. So this one here is actually a quite clean data set. So we have seen them declining at a rate of, let me get my cursor right, 110,000 BTC per month. So this is non-trivial, right? So the whales, now that said, whales have been net distributors for many years. So this is not exactly out of the ordinary, but what you can see is that this downtrend, I mean, it stands out amongst all of the previous whale behavior. Now, we have to be careful here because it's possible that this may represent a custodial type setup. This may represent, a large entity now that there's kind of a bit of momentum. Whether they're exiting the market or whether they're actually just moving their coins into a different custody setup now that things are evolving, kind of remains to be seen. But it's just something to be aware of, and we'll keep tracking this over coming weeks. This here is looking at whale volumes. You can see the green here. There's been a net uptick in whale distribution of late. And even the most bearish whale, right? If you come back here to from March 2020, right? This is that cohort that was buying since the March 2020 lows. They're finally back in profit based on their withdrawals. So anyway, it kind of gives you a bit of a snapshot that really whales are kind of the primary entity here that appears to be sending coins into exchange. But again, we'll kind of track and monitor this. I don't put a huge amount of stock in these kind of single events. What I look for is a trend. This one here just happened to catch my eye given the scale of it. So now moving on to looking at exchange type data and the flows in and out. What we do is we break this one down into different cohorts, right? Long-term, short-term. Let me just find the chart I was looking for. So if we're looking at the amount of realized profit or loss, naturally, given a rally to 30K, we expect a bit of profit, but you can kind of see it's pretty piddly. Now, granted, this is early days; we're only just seeing this kind of uptick. But again, it's this is full bull. This is just a couple of guys putting some coins into an exchange. It's kind of day-to-day noise. And given the uptick, this is kind of expected. We will see whether this develops into a significant trend, but right now it's kind of an uptick, but a certainly expected uptick. I believe it was these ones here. These are the ones I really wanted to look at. So for long-term holders, right? We've just had a bounce to 30K. BlackRock's announcing, people looking at this thing and going, right, well, that's my sell signal, right? Every time an ETF has gone forward or there's been some kind of news on this front, the CME futures launched at the 2017 top. The long ETF or Coinbase went live in the April all-time high. We then had the BITO futures ETF go live at the November all-time high. Hey, look, a new ETF. This must be the end, right? Going down. Well, long-term holders disagree. They're just not sending any coins into exchanges, which more or less tells us that the short-term holders are the ones sending these coins in profit, right? These trading folk. This is kind of what makes sense. You can see their profit is climbing across volume, realized P&L, and here's their exchange flows. So they have hit their threshold now of 1% of the short-term holder balance flowing into exchanges. So in many ways, this kind of looks like a bit of a short-term trade. It's kind of part of the volatility. In terms of what signals we can pull away from this, it's just, at some point in time, we're going to get this rally hit some headwinds. But at the same time, if we keep going, right? So we've got right now short-term holders, and you can see here, short-term holders sold into the 2019 rally, but it went up, right? Their peak selling was actually at the bottom. Their second peak selling was at $5,000, right? And then at $8,000, and we went to 14. So this is kind of that FOMO inducing stuff where people sell very early. It's that 2016 type effect. We're still grinding higher, but people just can't believe it. And they're bailing out the whole time. So at least for me, I tend to try and align myself with the long-term holders, right? These are folks who understand the volatility and are willing to weather it and kind of ride the wave. I'm certainly not a trader when it comes to that kind of short-term momentum, right? For me, 30K is like, okay, call me when it's six figures, right? That's kind of where I'm at. And you can kind of see that disparity playing out between the two. So it's going to be a rocky ride between here and there. But given the scale of the potential demand inflows that we're kind of seeing here, some people are going to sell early in the rally and regret it and buy back 50% higher, right? This is kind of how these things play out. On a realized profit loss basis, let me just have a quick scan. Here we are. SOPR was the metrics I was looking for. So if we're looking at SOPR, I mean, this is a textbook bounce. We now have this is starting to look like bull market behavior. We are getting people buying their cost basis, right? We're getting people buying their cost basis, these peaks. It looks a lot like 2020, right? This kind of, here's our sell-off. Here's our sell-off from, what's it called? FTX, right? Same kind of capitulation. And then we kind of oscillate around. Market's not really sure. It's trying to find its feet. But overall, we are finding support on that level. And here we are. We're kind of finding support on that level. We've had a couple of nice undercuts. This is great. This is absolutely fantastic behavior. Let's whack this guy on a 5-year. Short-term holders, much the same, right? You can see that we're now trading. This was bear market territory. We persist below a value of 1. Here we are in bull market territory. We persist above a value of 1. And we just have this structure now playing out. That's kind of our second or arguably third data point. To me, it looks like we are in bull market territory. My bias is now bull market territory until proven otherwise. I believe the burden of proof is now on the bears. That's fantastic, right? It's good to be cautious through this kind of process. And always, right, at some point, this rally is going to cap out. I don't believe it's going to be smooth sailing to the all-time high, but the burden of proof, I believe, is now on the bears to prove otherwise. And this is the last one I wanted to touch on. This is, we're going to be spending a lot of time poking around these metrics because, again, I want to make sure that you guys have the maximum value. And this thing here, I mean, again, I keep fawning over it, but it really is a special entity. I'm going to be building out this concept a lot more and kind of setting up, I might set up like a dashboard that we go over each week, at least one of the sessions. That's kind of going to be almost the Bible of this type of thing, how we can really track the flows as this cycle plays out. And what we've basically seen is that we are still firmly in profit territory, right? We've seen an acceleration of short-term holder profits. It's great. It's exactly what you want to see. These bull markets are characterized by periods of profitability, naturally, because the market's going up. And what we look for is we want to see peak profits. Maximum profits occurs near market tops. So we're going to keep an eye out for these kind of events when you start seeing a rally get a bit excited and overheated. It doesn't mean that the macro rally is over, but it means that like the daily time frame type rally is starting to get a bit overheated. And likewise, these negative, right? As we get higher, the corrections will get more severe. Because basically, the higher you go, the more people believe it can't end, and then it sells off, and people go, "Oh no, the bear's over! Like the bear's back, the bull's dead." And then, of course, people step in and buy the dip, and away we go. So these periods of negative sentiment that just kind of burst into the mix is good to keep a track of, but at some point in time, they get heavier and heavier and heavier until the thing just literally implodes, right? And then that's the end of it. Let me just turn this presenter mode on for 1 second. And what you can see here, note that they start pretty small. These are like the bottom of corrections. They start like these small little dips, right? Opportune times to be adding to the position, right? Dip, dip, and then eventually note how they start to waterfall into these larger and larger events, right? So these things start to get angrier and angrier over time, and then eventually you get the washout. And it works to the other side as well, right? This is decaying momentum for the bears, and then an acceleration of momentum for the bulls. So you kind of look for both the micro pattern and the macro pattern. I'm going to look into building out this as an advanced metric as well. So stay tuned for that. So there'll be one that's available for folks with an advanced plan. But I will formalize all of this over coming weeks because I think it's really, really powerful. So anyway, big picture summary. The bears, the burden of proof is on you. And, we've just got a lot of structure that looks healthy. It looks like there's a supply demand. It looks like there's a realized profit and loss, like the pattern is now by the dip territory. It's great to see. And given the kind of scale of the news, it kind of makes sense. And, if this thing gets approved and there's a regulatory shift that kind of comes in the US, at the very least, Bitcoin stands in a unique position where there is clarity. That is certainly a big takeaway. Is that there's just like it's quite clear that Bitcoin's in the clear, and Wall Street wants a piece of that pie, and they have the infrastructure to service, just a huge pool of capital, both institutional but also retirement accounts and 401ks, all this kind of stuff. It's pretty big, and the signaling is people trust these entities, rightly or wrongly, and offering a product that allows them to hold these assets without worrying about keys and all that kind of thing it was always an expected and a real result. We're just kind of getting to that business end of the cycle. So anyway, hopefully you all had a great weekend, and I'll see you in the next video. Cheers.